Good morning, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host another Red Cloud webinar on uranium today. We are going to hear from management of ENRG Elements, including James Egan's, he's chairman of the company, and Caroline Keats, the CEO. Now, during today's webinar, they will provide an overview and outlook, and then we'll take some questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this energy webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on page 2 of Energy Corporate Presentation, and that can be found on the company's website, enrg-elements.com. For Red Cloud Securities, I'd highlight this webinar is for informational purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on energy resources. Now with that, energy elements. So with that, I now turn it over to Caroline to make introductions and update the audience on energy.
Hi everyone, my name is Caroline Keats and I'm the Managing Director and CEO of ENRG Elements. I thought today would be a fantastic opportunity to introduce you to James Egan's, who is our Non-Executive Chairman. And James comes to us with such a great depth of understanding of the copper and uranium space, and he's someone that I hold in such high regard. So you'll get to hear him speak today a little bit about the team and also about the market. We won't tarry on the legal information. You can look at that later. ENRG Elements. We are an ASX listed African-focused exploration company. We have uranium assets in the uranium-rich Mersoi Basin in Niger, and we have copper assets in the emerging world-class Kalahari copper belt in Botswana. Last year was a significant period for the company. As a board, we refocused our efforts. We wanted to be part of an industry that supported clean energy and decarbonisation. In line with that, we changed the company's name from ENRG Elements, from Kapor Metals to ENRG Elements. We also completed the acquisition of the Agadez Uranium Project in May last year. And shortly after that, we updated a historical resource. So now we have a resource that is compliant with JORC 2012. We got on the ground, did exploration work in both Niger and in Botswana. And at the end of the year, we defined an exploration target at our Agadez project. This year, and also within that 12-month period, we'll be looking to update the resource at Targeted again. So a really significant period and transformational period for the company, and we're looking forward for the next 12 months to be just as important. James, I'll hand over to you to talk a little bit about the company and the board and the management team.
Hello, can you hear me? Sorry. Hello, everybody. James Egan's here. I would just like to basically introduce myself and explain a little bit about the background to the current management. I've been involved in the uranium industry now for 40 years, starting in 1980. And I've had a commercial and marketing role in the mining industry ever since. I was also involved through employment with Western Mining in the copper industry for 15 years. And then working at Paladin Resources, Paladin Energy, experience in Africa and the 2 projects there. And I worked with Caroline at that stage. Caroline, who's our CEO, is a lawyer by training and has held several senior in-house positions before branching out into corporate life. I worked with her, certainly with Paladin, when we worked in Namibia and Malawi projects together. Caroline went on to have operational experience as Managing Director and CEO of Tiger Resources, copper mining and development company in the DRC. Our other non-executive director, Quentin de Klerk, has extensive hands-on experience. He's a mining engineer, partner in an engineering contracting company. He's an absolute specialist in Africa and also a resource specialist. Very hands-on, very practical. And one of his specialties is actually being able to convert resources to reserves. Behind this, we have the backing of a very competent technical team. Some people who were involved with the Niger resource that we have at the moment via Paladin, and other very experienced people, copper geologists that are involved with our Botswana project. So even though we're a small company, we've got sufficient operational width and depth to be able to achieve what will be a fairly ambitious program. Caroline, back to you.
Okay, James, very humble. He failed to mention that he was on the board of the World Nuclear Association, also on the Copper Development Centre. He was the chairperson of the Nuclear Information Centre as well. And for 15 years, he was the global person responsible for marketing and logistics of, the commodities at Olympic Dam. So a really important person to have as part of the team. Thanks, James. Let me talk to you about Agadez. Agadez is our flagship project in Niger, which at present has a shallow inferred mineral resource of 16.5 million tonnes. We have a grade of around 295 parts per million for 10.7 million pounds of U3O8 equivalent. When we were looking at the Agadez project, our flagship project, it was appealing to us for a number of reasons. One of those reasons was because of the region that it was located within. Now, this project consists of 3 exploration licenses covering an area of around 726 kilometres squared and 1 exploration licence application. You can see those tenements in the map on the right-hand side. The exploration licenses that we hold are the green blocks, and the exploration licence application, which covers an area of 500 kilometres squared, is the red block adjacent to the tenements that we currently have. All of these licenses are located within Niger's Mersoi Basin, which is widely renowned for being highly prospective for uranium. Our tenements host similar geology to the Orano mines that have been operating and producing in the region for around 50 years. And also those tenements host similar geology to the significant deposits that are held by Toronto-listed Global Atomic and GoviEx. Global Atomic is listed on the main board and GoviEx on the venture exchange. Those companies are significant because they're both on the verge of developing their mines in Niger. The other reason why we liked these assets was because there had already been a lot of work done on the ground. There was 24,000 metres of drilling already completed before we acquired the assets. The work started during the 1950s and the 1960s when the French government undertook a drilling campaign. They undertook radiometric studies and they identified it as an area of interest. We have ASX listed ENRG Resources who acquired these tenements in 2007, and they undertook a drilling campaign of around 9,500 metres on the tenements that we acquired. And in 2010, they announced a shallow inferred mineral resource, albeit under JORC 2004. In 2010, Paladin Energy acquired these tenements. They undertook a deeper drilling program of around 6,500 metres, and that confirmed that there was mineralisation at depth, very similar to the significant mines and the deposits to the north of us. Unfortunately for Paladin, following the negative implications of Fukushima, in 2016, Paladin then relinquished these tenements back to the Niger government, and they did that at a time when uranium prices were sub $20 a pound. We completed the acquisition of these tenements in May last year, acquiring them from Endeavour Financial, who were granted the permits in 2017. Last year, one of the things that was incredibly important for us was we acquired the historical exploration data for the Agadez project from Paladin. And this work was instrumental in saving us a lot of time, effort, and money, and from having to do work that had already been done. So this historical exploration data has also been a really important platform for us to use as a springboard for our own exploration efforts. The other reason why we like these tenants was because Niger is such a strong jurisdiction for uranium. As I mentioned at the very beginning, the Orano mines have been producing uranium for at least 50 years. And that's made Niger consistently one of the largest producers of uranium globally. In fact, in 2021, Niger was the 7th largest producer of uranium. And prior to that, in 2020, it was the 5th largest producer of uranium. Against that background, you have a government that is incredibly supportive of mining. You have a country that has a strong uranium mining culture. You've got a workforce in the region. You've got the infrastructure in place: roads, water, power, and airport. And I think another thing that is a really big tick in the box for us, you have Toronto-listed Global Atomic and GoviEx, who've been operating really successfully in the region for a significant period of time. I'm going to skip this slide for now, and I'll come back to it. I just wanted to talk to you a little bit about our drilling program that we undertook last year. Once we had acquired the Agadez Uranium Project, we wanted to get on the ground as quickly as possible. So we completed the acquisition at the end of May, and by the middle of June, 2 weeks later, we had commenced an 11-week, 5,500 metre drilling program. That drilling program was largely a rotary mud drilling program, with about 150 metres being diamond core. And the drilling program focused in and around the Target resource. And we confirmed that there was mineralisation from surface down to a depth of around 40 metres. And mineralisation remains open in multiple directions and also at depth. We found 3 significant gamma results which were located within the Target centre, and they were the highest grades, and we saw that being between 1,100 and 2,200 parts per million for 2 metre intersections. At the beginning of this year, we were able to announce that the assay results from the diamond core program confirmed the downhole logging results from that drilling program. And why that was relevant was, one, diamond core is significantly more expensive for us than rotary mud and downhole logging. So the ability to be able to do diamond core for only a small portion of our program, send the material off and have the assays done, and have that then confirm our downhole logging results was important. When we do downhole logging and through rotary mud, we get the results at the end of the day, and it means that we can be incredibly responsive to the environment and the drilling program on a day-to-day basis. So from that point of view, it was really, really positive. Off the back of that work, we are looking to update our mineral resource in the very near future. So we're really excited about that. This is an image of the drilling program in that Terra Mazor permit. You can see the Target centre which is surrounded by a circle which represents the current deposit at Target. Our mineralisation is really sitting within the lower Jurassic formation, within the Shirazin 1 and Musadin sets. which is shallow. And you can see that that is part of our target one area where we are focused on a shallow drilling program. And you'll see that there's material that comes from the same kind of region from Global Atomics, DASA, and the Orano mines. Our second target for mineralization is in the deeper zones within the carboniferous layers. And that's where we'll see deeper drilling, and we'll also expect to see higher grades. Based on the work and the drilling that we have already done and the historical exploration that has been done on the past on these tenements, we know that there is deeper mineralization with higher grades on our tenements. So there's a real opportunity for us to look at material from that level. But in the meantime, we're focusing where there's the biggest bang for our buck, and that is the material that is sitting at surface. At the same time that we completed our drilling program in Niger, we also undertook a rock chip sampling program. And that program was really informed by historic radiometric studies and also based on previous soil sampling that had been done in the region. The results of that program were outstanding for us. Of the 83 samples, 90% of them had grades above 500 parts per million. 5 of those samples had grades above 10,000 parts per million, and 2 samples had grades above 26% and 34%, and that's 260,000 and 340,000 parts per million respectively. Those results were so spectacular for us that we sent all assays we re-assayed material that had grades of above 10,000 parts per million. We sent them to a different lab, used a different methodology in order to assay them, and they confirmed the original results. So for us, it confirmed what we already knew, that there was mineralization across our tenements, and it supports our very strongly held belief that we'll be able to find more pounds in the ground and also at a higher grade. So the results from this work will be utilised to determine our regional exploration program. Now I'm going to skip back a little bit if you don't mind. At the end of last year, off the back of all of this work, we were able to identify an exploration target of between 90 million pounds and 130 million pounds. And we're looking to see grades of between 300 and 400 parts per million. And we're looking at an average mineralization thickness of between 2 and 5 meters. We were able to define that exploration target based on our review of the historical exploration work, based on our understanding of mineralization across our tenements, and based on our knowledge of the geological setting of the adjacent properties in the region. Now, in order to test that exploration target, we also want to find new areas of mineralization across our tenements, and importantly, we also want to increase our resource at targeted. We have designed a drilling program of 20,000 meters, which we intend to implement in phases. That drilling program, again, is predominantly a shallow drilling program, average depth of 50 meters for 379 holes, and we'll be looking to commence that drilling program in the middle of this year. Now, that's really my discussion on our Agadez project in Niger. I wanted to talk to you a little bit about our Ghanzi West project in Botswana. We have a large area of tenements, 6 prospecting licenses, over 2,600 kilometres squared, and these tenements sit along strike of Sandfire's Motheo copper mine and also Khoemacau's Zone 5 deposits. Last year, we undertook an airborne electromagnetic and gravity survey over our Kara prospect, And we were really pleased to be able to announce that we were able to identify 3 domal structures, which are very similar to those identified on Sandfire's A4 and T3 deposits, which form part of its Motheo copper mine. Rather than executing or trying to execute or attempting to execute a drilling program over that work, we wanted to refine our drilling targets. And so we recently completed an induced polarization survey over that Kara prospect, and we've been able to identify a number of high priority drilling targets. So we're looking at that geophysical work right now, and we're in the process of developing a targeted exploration program for Botswana for this year. So thank you. That relates to our Niger and our Botswana projects, and I'd like to hand over to James, who can talk about the market. Wait a sec, James. Let me get to the slide.
James, I think you're still muted.
Start again.
There we go.
Sorry, so I was saying, talking about the market, I've been in it for more than 40 years, which I think must qualify as a certain definition of optimism. It's very hard to see the future without nuclear power playing not only recognised for the role that it already has, but an expanded role, both in terms of the very simple thing of lifetime extension for distinct plants, the possibilities of small modular reactors of various types being able to come on at better capital cost and power cost, as all of the various energy sources sort of rebalance and re-equilibrate. So over the sort of medium to long term, I think very, very comfortable about where the uranium market is going in terms of overall demand and in terms of pricing. To be fair, when I joined the industry, what is now the spot price was around about $42 in dollars of the day, and we're now looking at slightly above $15 of these days. So obviously things can change quite fundamentally. Utilities, when they look for future fuel, obviously need uranium units. They also need supply diversification and risk management. And in the case of Africa, and particularly Niger, as Caroline's explained, it has a very, very long track record of supply into the market. And coupled with that, with the resources and the opportunities that are there, I think new Niger sources are obviously of interest to the world. Overall, in terms of market developments, obviously the big things that affect nuclear we've seen before. They are generally one-off. We've had 3 Mile Island, we've had Chernobyl, we've had Fukushima. Now, of course, we're looking at the realignment of parts of the nuclear industry, which is dependent upon Russia. But overall, taking those into account, I think you've still got grounds to be optimistic about uranium in terms of pricing and growth. And then, of course, we've only touched very briefly on copper, but copper itself is going to be one of the essential elements for anything electrical. And I think if you've got access to good prospective copper resources, then at a reasonable cost, it makes a lot of sense. So that's really where we actually sit at this stage. Caroline, over to you.
Okay. You know, as a company, we are taking a really focused and disciplined approach to developing our assets and building that company. Right now, we're an early stage explorer. We have plenty of potential for upside. We believe that we have the right assets. We believe that we're working in the right jurisdictions, and we have the right team to not only execute the project in its current form, but also to develop it and expand the company and take it to the next level. And right now, against the background of energy security, energy costs and decarbonisation. We believe we're in exactly the right place at the right time. So thank you.
Great, thank you very much, James and Carolyn. Great presentation. So we are now going to kick off the Q&A portion of the webinar. A reminder to everybody on the line that you can type your questions into the chat box at any time, and we'll get to as many as we can. So we already have a few questions here. James, let's start off with you. You know, you mentioned you like the direction in the uranium market, and contracting does appear to have increased. Prices seem somewhat stable around 50 bucks a pound right now. There is certainly, you know, this range is certainly high enough for Global Atomic to start building NASA just to the north of you. But what's your take on the current uranium price, and do you see any potential price appreciation in the coming months?
Look, months aren't really a good way of looking at these sorts of things. I think you've got to just look a little bit further out. Long-term contracting for power utilities, you know, runs out over a much longer period. And we've got a couple of factors going on here. We've still got real demand. We've got the likelihood of growth in demand. We've also got optimism about probably commitments to new nuclear power and certainly continued growth in some countries. And the other side of it is we've still got the reality of cost pressures on availability of resources. And all of those things will feed through to lifting the long-term sustainable price. There's lots of people out there that make forecasts about those sorts of prices, and I really don't disagree with them. But if you go back to the last cycle, we were looking at prices in those dollars of a day in the mid-70s, and that really wasn't enough to bring forward the production that's necessary. So I think we've seen a $50 spot price, which I think is a permanent reset as a new base, and we'll see what happens from there.
Okay, hopefully we see some movement going forward. I do think contracting is certainly helping support this
Yes.
price. So
Yes.
great. You know, your management team has experience both in Africa and in uranium, but what was it really that made you decide to rebrand the company and expand outside copper in Botswana?
Caroline?
Well, I think for us, we had the opportunity to look at the uranium project. We had one asset, which is a relatively greenfields project. We had a team that had experience in both copper and in uranium. When we looked at it and what we have done over the next 12 months, you know, we think it's been quite transformational, because what we did was we started off with one project, which was greenfields. Now we've got two projects in two mining-friendly jurisdictions, in two commodities that are basically critical to the clean energy transition. We felt that that was an important part of what we wanted to be doing as a company. We want to be part of that. We believe that's an important role for us to play. What we did was that we did work on the ground in order to develop both projects. So we did exploration in both Niger and in Botswana. And during that 12-month period, we updated a resource once, and we'll be doing it again relatively shortly. So from our point of view, we want to take this company aggressively and astutely to the next level. And the best way for us to do that was basically to operate in those two jurisdictions and with those commodities that we believe are going to be critical as we move forward.
And I think on the name, you might point out that Kopor, which was the company's old name, was actually copper in Swana. So we thought we should sort of broaden the name a little bit.
For sure. So now you were both with Paladin when it first targeted these Niger projects, and not to put words in Paladin's mouth, but what was it that attracted them to Niger? Because Paladin's wasn't a small company at the time. You know, there must have been a large enough prize in the area to make the needle move for them.
I think Paladin was always in the mindset of making sure that you had the pipeline of production. So you had Kalahari, you had Langer Heinrich, you had some smaller projects in Australia, and Niger was recognised as somewhere that was significant for the production of uranium. You know, one of the things I think that, James, you can attest to, and I'll leave that to you in a bit, but it's very hard to operate in a jurisdiction in producing in producing uranium that doesn't have the regulatory regime in order to allow you to produce and export the material. So a place like Niger that had been producing for such a long period of time made it a relatively easy place in order to decide to go, also considering the mineralization that was already known to be there, and yeah, it was going to be a lot easier than maybe Malawi to get into, and they'd already been working there for some time. James?
Yes, no, I endorse that. Niger's long experience with uranium production and export means that it's a mature regulatory environment for the things that go specifically with that commodity. And that's important because we've had experience in starting projects in countries where that hasn't been the case. And there is quite a long process in getting the regulatory procedures in harmony with what you actually need for practical business. And I can speak from that, being an Australian. It's taken the Australian government quite a long time in the 80s to get its regulatory regime in sync with how business operates. So Niger is certainly a head start on all of that.
Right. You mentioned regulatory environment, and you know, Niger is a top uranium jurisdiction, and I think it leans to the west, along with U.S. and Canada, Australia, perhaps a little unlike South Africa or Namibia. But maybe can you provide a summary of tax or royalty regimes in Niger that help make this an attractive jurisdiction?
Certainly. Before we even acquired the asset, I spent a few months in Niger, one, to determine whether we could work on the ground, whether we could work with government to understand whether the regime was going to be suitable for us. So our tenements have a mining convention for 20 years. It has a sliding royalty regime starting at around 5.5% royalty. The government is entitled to 10% of the mining entity, which is free carried. They're entitled to up to 30%, I think, under our mining convention, and anything above 10% is paid for by the government. And I guess because you've got a government that has suffered the effects of Fukushima, with companies, and particularly listed companies, bringing foreign investment into the jurisdiction, leaving that area, the government has been very positive and very supportive in attracting new listed company foreign investment into the jurisdiction. And that's meant that we've had a lot of access to the minister, to the department, and they've also been very amenable to listening to us and understanding what the requirements are of the company in order to operate successfully there.
Oh, absolutely. I think government actually has skin in the game if they go over 10% ownership in this country, and I think that's definitely a positive move. So, your Agadez project, this is your flagship. It's a great jurisdiction, good location, you know, geologically and infrastructure-wise. Perhaps might remind investors how far away you are for the Orano mill, which is to the north, and maybe from the Global Atomics Development project currently under construction.
Well, there's such great opportunities for us, you know, when we think about that. So from our deposit, we're about 70 kilometres, 75 kilometres from DASA, which is Global Atomics Project, and within between 100 and 200 kilometres away from the projects at Arlet.
Okay. And, you know, with the 10.7 million pounds of uranium resources already, do you find that those resources are helping attract either investors or potential off-takers? And, you know, I'm assuming you aren't really satisfied with 10 million pounds. I think you're looking at, you know, probably a couple orders of magnitude higher than that.
Yes.
Yeah.
Which is why we're excited about the next resource update. We're also excited about commencing work on the ground again, and executing on the next drilling program so that we can update the resource. We have been very surprised and positively by the positive feedback that we have got globally with regards to the project and the interest that we've got about what we're doing and how we're doing it. The sentiment towards uranium and copper is certainly there and supporting us. When it comes to offtake, it's not something that, it's a bit early for us at this point in time to start thinking about that, but we're always considering what strategic opportunities that basically exist for us. James, would you have anything else to add with regards to that?
Well, no, I think you've summarised it. I think the resource at the moment, obviously, you know, as Caroline says, we're optimistic. It needs to be much bigger. The thinking utilities watch very closely what we're doing, and I think when the time's right, we'll be able to reach out. You know, we've had quite a lot of experience in this, and I think we'll be able to judge it when it's appropriate.
Mm-hmm. You use the word strategic, and you know, we know that Orano is interested in finding feed for its mill, and as you said, it's been running for about 50 years now, and one of its mines just recently closed. Have you had any discussions with Orano, and maybe not necessarily as a strategic partner, but you know, I imagine at one time or another they probably own this land anyways, and they probably have some exploration ideas. Have you been able to tap them at all for information?
Not at this stage, but we've been working with geologists who have historically worked with Orano, and so therefore the work that has previously been done on the ground is, you know, part of the data set that we have. It has been identified as an area of interest by the French government in the past, and we do believe that there is going to be a point in time where, you know, there is an opportunity to sit down and work out what, you know, what is potentially possible for us in that region. We note that Global Atomic in the past had an arrangement with, I think it was the Cominak mine, in order to process some of their material. So it goes to show that there are opportunities that are open. And the fact that Global Atomic is sitting 70 kilometres to the north of us, you know, is something that isn't lost on us either.
Right. Now they've got a project, Global Atomic, to the south. It's a continent, I believe it's called, that is ISR amenable. Have you guys considered looking at potential ISR, or is everything that you have really close to surface at this point here?
The material that we have right now is between surface down to about 40 metres. So ISR isn't really something that we're considering at this point. However, as part of our deeper drilling program, where we know that there is higher grade mineralisation on our tenements, that's something that we will consider. And, you know, we will obviously have to undertake whatever processing studies in order to determine whether that's going to be something that's available to us or not.
Mm-hmm. Yeah, how much potential do you see in those deeper zones? You know, have you already spent a lot of energy, or have previous owners spent a lot of energy trying to get down to those at depth? I believe that's in the carboniferous rocks, right?
Yeah, so there has been some historical drilling that is in that has been deeper. That was done by Paladin, and they did identify mineralization in deeper zones within that carboniferous area with higher grades. In fact, nearby our resource at Targety, there were a number of holes that were done by Paladin where they hit mineralization in the order of 1,300 to 1,600 parts per million. For us, that's really exciting, primarily because in that part of the tenement, the carboniferous zone for one of the areas sat between surface and 40 meters, so within 50 meters from surface, and the other one was sitting just under 180 meters from surface. So it's not that deep in some of the areas. So for us, it's all very exciting. But as I said during the presentation, the biggest thing for us is to make sure that we can get the biggest bang for our buck. And in that way, that's the reason why we're targeting our shallow mineralization, which may have a lower grade, but certainly is going to be far more economic to access. And to build that targeted resource so we've got more pounds is something that is a great thing to do. That's what we think anyway.
Yeah. Well, you say it might be lower grades near surface, but you drilled the Tarkadit center deposit last year, and you had several holes that had significant grades up to I think 2,300 ppm. So that's about an order of magnitude higher than the average resource grade. So your long-term goal: increase grades, increase size. When do you plan to follow up on your program from last year? What sort of exploration plan do you have for this year?
So we're looking at doing a drilling program commencing in the middle of this year. And look, at this point in time, we're looking at starting with a drilling program of between around 5,500 meters, which is similar to what we did in the middle of the year last year, and then we'll implement the rest of it in phases, noting that we have a drilling program of around 20,000 meters already in place for us to test that exploration target. And one of the things that we believe might be of benefit to us is for us to use some resistivity testing, some groundwork, so geophysical work, in order to help us better target mineralization, because even though we're actually getting really good hits now, we'd rather sort of get better hits.
Mm-hmm. No, absolutely. And speaking of better hits, you had chip samples from Agadez last year that returned even higher grades than the drilling. Multi-percent range, all the way up to 34%. And most samples, in fact, were higher than resource grades. So, are these samples in potentially new areas? Or are they going to help expand existing zones? How do you incorporate that work into what you're doing now?
So when we did the rock chip sampling program, the areas that we targeted came from historic radiometric studies. Also, though, we targeted areas where NGM did some soil sampling. We had noticed that NGM had some samples of around 17%, which we thought was great, but we wanted to test that for ourselves. And obviously we came back with similar or better results in some instances. Ultimately, what we will do with that rock chip sampling is it will be used to identify what that drill program is going to look like. That mineralization is sitting on various parts of the 3 tenements, but it will also be a good opportunity for us to, well, it's given us a better idea of the mineralization, the type of geology that the higher mineralization is sitting at. And so that will also help us inform what our drilling program is going to look like. And we think that the resistivity test work will also help us with regards to that as well.
Okay, great. Thank you for that. I look forward to following your uranium exploration work this year. I think I see plenty of upside potential there.
Excellent.
Yeah. So do you, looking at Ghanzi and Ghanzi West in Botswana, do you plan to do any work in copper there this year?
That's also an important piece of our puzzle. Although our flagship project is our Agadez Uranium Project, we see that there's some great opportunities for us to hit potential mineralization if we enter into a drilling program. But what we don't want to do is just do a wildcat drilling program in order to test the theory. So we're taking our time in determining how we're going to drill and what work we're going to do. So we're in the process of reviewing the geophysical work, and then we'll target our exploration program, which we will implement during the course of the year. But it will be based on the review work that we're doing now.
Mm-hmm. Do you think it's too early to maybe bring in a strategic alliance or a partner there to help you essentially spend less on that project and focus on the uranium?
We're always open to something that makes sense. And so we'll continue to field questions or potential partners, but it's got to make sense and it's got to bring value to our shareholders. So it's just a matter of timing, to be honest. Yeah, it's a matter of timing.
Right. Okay. Great. Thank you for that. So you mentioned shareholders. You're currently listed on the ASX. Do you have any plans to either list on the TSX Venture or OTC boards anywhere else?
We actually are listed on the OTC. We did that in February this year. And that was because of the demand that we saw coming from North America. And we wanted to make it easier for our North American investors to be able to come into our stock. So we were really pleased when that happened. And we're hopeful that that's going to add a whole different dimension to our shareholder base as well.
Great. Great. Okay. Well, we've been talking for about 45 minutes, so why don't we wrap it up there? So I want to thank you very much, James and Caroline, for speaking to us today.
Thank you.
Indeed.
Okay. Thank you, everybody else, for tuning in. Our webinar series continues next week when I sit down with Basin Uranium. That's Monday, April 24th at 2 p.m. Eastern. So have a great day, everyone. Thank you very much.
Thank you.